Hey everyone, welcome to our third and final video on credit cards. In the previous video, we discussed in detail what the pros and cons of these credit cards were, how to use them responsibly, and finally we talked about whether or not you should get a credit card. If you haven't seen our last two videos, I strongly suggest that you check them out to get the most out of this video. Before we get going with this week's video, our word of the day is onus. It is used to refer to something that is one's duty or responsibility. For example, credit cards are a tool to make your life much easier if you use them well. The onus is on you to make sure that happens. Now that we've got our introductions out of the way, this week we are going to get practical. Everyone meet Nikhil. Nikhil is a recent college graduate who has just secured his first job. He spent his college life working on team projects and extracurriculars, most of which taught him something new about the world. He is hardworking and a lifelong learner. Now that he's entered the workforce, Nikhil feels like it is time for him to start building a credit score and also take on some financial responsibility. Based on some quick research that he did online, Nikhil decides to get himself a credit card. During the application process, the bank manager asks him a few questions. Are you above the age of 21? To which Nikhil happily shows the banker his Aadhaar card. He had turned 21 just a few weeks ago. The banker then looks at Nikhil and asks him, "Do you have a paying job?" He explains saying, "We only offer a credit card to clients who make a monthly salary of at least 25,000 per month." As proof of his salary, Nikhil shows the bank manager his salary slip as well as his income tax returns. Finally, the manager asks Nikhil for his PAN card details. On seeing that Nikhil hasn't previously defaulted on any loans and has an average credit score, he approves him for a credit card. A few days later, Nikhil gets his brand new credit card by mail and he sees that he has been given a credit limit of Rs 75,000. Now, although Nikhil has had his card for a few months, he doesn't really understand what all the confusing terms mean. He was told by his father that the most important thing is to pay his balances in full. Fortunately, Nikhil knows how to accept good advice. However, he doesn't really know what anything else means. So for today's video, we'll take a look at Nikhil's statement and try to break down the madness behind his credit card bills and find out if they are really that difficult to understand. This is a snapshot of Nikhil's credit card statement for March 2022. As you can see, his bill date is on the 1st of April and he needs to pay his bills by the 19th of April. This means that Nikhil's billing cycle is between March 1st to March 31st. A billing cycle, also called a statement period, is the time between two statement closing dates. Since Nikhil's bill date is the 1st of April, his next bill date is going to be 1 month later, the 1st of May. Any purchases made between March 1st to 31st will come under his March billing cycle, and any purchase thereafter will be in his April billing cycle. Next up, we have the payment due date. The payment due date is the date by which Nikhil will have to pay for all of the purchases that he makes during his March billing cycle, which is March 1st to March 31st. On looking closely at his statement, Nikhil notices that his payment due date says 19th of April 2022. On doing more research, he finds out that his credit card comes with a 50-day credit period. So, what is credit period and how exactly does it work? As we mentioned earlier, all the purchases made in between the 1st and 31st of March come under the March billing cycle. The payment due date is then decided based on the starting date of the cycle. A simple formula for understanding this is by adding 50 days to the start of the billing cycle. As we already know, in Nikhil's case, the cycle started on the 1st of March 2022. If his credit card company offers him a credit period of 50 days, then he will need to pay his credit card bill by the 19th of April. If you followed what I just said, then you'll realize that if you buy something earlier in the billing cycle, more time is given to you to pay off the amount. This means that if I make a purchase on the 1st of March, I will get 49 days worth of credit. However, if I make the same purchase on 31st of March, I will only get 20 days of credit. It doesn't matter if I make a purchase on the 10th, 15th or 25th of March. All the bills in my March billing cycle will need to be settled on the 19th of April. Going back to our example, we can see that Nikhil's statement has something called the opening balance. This is nothing but the amount due from the February billing cycle, that is last month's bill. Credit card bills are a special type of revolving credit. This means that each customer is given a line of credit that needs to be replenished by a certain deadline date. Once a customer reaches the credit limit, he or she will not be able to take any more loans until he pays down the debt that he has already taken. We can clearly see that Nikhil has spent Rs 45,267 rupees during his February billing cycle. This amount has to be paid by the 20th of March. The next section is about payments and credits. This amount is nothing but the payments that have been made on the card during the March billing cycle. Notice I said payments and not purchases. In Nikhil's case, the payments majorly come from refunds of online orders of Rs 3,446 and of course the full payment of February's credit card bills, which is 45,267 rupees. The purchases or debit section refers to all the purchases that were made for the month of March, which is all of Nikhil's purchases during this month. Lastly and undoubtedly the most important section is finance charges. To understand finance charges, we first need to understand this little line, the minimum amount due. Credit card companies are very clever. Would they offer him all these perks and rewards if there wasn't something in it for them? No way, right? It's a well-known fact that humans can be very irresponsible with money. So, to profit from this irresponsibility, credit card companies lend more money to people than they need. By doing this, they are effectively increasing the chance that someone somewhere won't be able to pay off their credit card loan. If Nikhil borrows more money than he can afford and doesn't have enough money in his bank account to pay off his total dues, then what happens? At this point, the credit card company will step in and say, "Hey there Nikhil, it's okay, we know that this has been a tough month for you. You don't need to pay the whole amount on your loan. Instead, you pay just 5% of your dues and you can pay the remainder later when you can." This 5% payment is the minimum amount due. So, the next question that pops up is what happens to the remaining 95% of Nikhil's loan? That's the real catch. In the background, the bank has already begun charging him interest on his credit card debt, and the interest isn't charged from the 20th of April. It's charged right from the 1st of March, the beginning of his billing cycle. Do you want to know what the worst part is? This interest can end up being as high as 45% annually. To put things into perspective, a simple home loan can cost around 7% annually. If Nikhil doesn't pay up, he'll quickly find himself in a revolving debt trap he won't be able to get himself out of. This is why credit cards get a bad reputation. Life is very unpredictable, and for those of us who are living from paycheck to paycheck, credit cards can be a very dangerous option. This is why Nikhil was always prepared. He knew that credit card debt is the worst kind of debt to be paid for and made sure that he always had a minimum of Rs 75,000 invested in a very liquid money market fund waiting for him. This money is above and beyond his monthly expenses, and he doesn't combine this money with his investment accounts. This cash is specifically there to shield from the future, which by nature is unpredictable. Getting back to our example, we can see that once all credits and debits are added to the opening balance, Nikhil's total dues for the month of March are 47,858 rupees. He will need to pay this amount by the due date, which is the 20th of April. Lucky for him, his bank and his credit card issuer are the same company. So he found an autopay feature that automatically debits this bank account on the due date. One less thing for him to worry about. And that's all folks. We've managed to go through the whole of Nikhil's credit card statement, and now he knows what all of those terms mean. Let's try and sum up what we have covered here today. A credit card is a form of credit that resets itself in 31-day cyclic periods. This period is known as the billing cycle. All of the purchases made during a billing cycle need to be paid by a date known as the payment due date. The credit period is the number of days between the start of a billing cycle and its due date. Most credit cards offer a 45 to 50 day credit period. If you have any balance left over from a previous billing cycle, it becomes your opening balance for the current billing cycle. The payments or credit and purchases or debits tab is nothing but the purchases or payments that a credit card holder makes during her billing cycle. Finance charges are charged on the credit debt that is not paid by the payment due date. It is one of the most expensive forms of debt, which is why everyone must do their best to avoid it. Failure to pay your credit card bill on time can also lead to destruction of your credit score. Always pay your credit card bills in full. And with that, we come to the end of our third and final video on credit cards. In our 3-part series on credit cards, we covered the history behind these cards, what are the pros and cons of these plastic loan machines, and finally, how to read a credit card statement inside and out. We really hope that you enjoyed this edition of Filter Coffee Finance. If you did, please do like and share. It's a small step that goes a long way in helping us make useful personal financial videos for all of you. If you like the content you found here, check out our other videos on investing and finance as well. If there is any specific topic out there that you would like to see in the future, please do let us know. As always, we are open to any tips and suggestions that you might have in mind. Keep smiling, and until we meet again, this is Filter Coffee Finance signing off.